This is Sacha Pradyuman of Cirrus Research. The latest regional Outliers report is just out. This is our cross-market comparison on fundamentals for all markets, or the 10 key regions and markets. In addition to that, we also drill down into the sector level reads. A couple of quick takes in this report. The title, Tech Forecast Slowing in the US as Chinese Estimates Bottom. I think this is something that we've seen in the last 4 or 5 months, where after the prior 2-3 years of the Chinese economy really grounding to a halt, in the last few months, we've seen signs of life where some of the growth expectations for the overall market has started to recover. When you drill down into the sector, I think there's a really interesting contrast we're noticing now. What we're looking at here, in this instance, what you've got is the forward estimates for the technology sector of China versus the US. And notice during this sort of tariff moment, how expectations in the US started to tumble for technology. And with the Chinese markets, what we're seeing is the Chinese expectations are rising. Part of this is that the expectations had fallen out to such a bottom that it's probably not hard for these estimates to climb. So I think that's part of this. But the idea is that really what's the next chapter of this AI story is that all of a sudden, in a few short months, we realize the US isn't the only player. And I think this will present some volatility in terms of the diffusion of AI leadership. In addition to that, a look at the transport sector is super interesting, that during the fallout with the tariff war, and hopefully it does get resolved, as much as regions like China, their transport sectors didn't look affected, the European sector was affected but recovered almost fully. The US is recovering, but nowhere near as well. And this says something about the trade wars and its potential cyclical impact. So if these tariff levels remain high, this sort of defensive slowdown posture is going to remain in place. If the tariff clumps end up being really relaxed, then this could potentially be back to normal. But in terms of relative market impact, I thought this was super interesting. And then in terms of the report, take a look at our valuation matrix. The grid here represents a region that's discounted or expensive. And then vertically down, take, for instance, Asia Pacific. The green box means that the market there is discounted relative to time. And then when I drill down, what you'll notice is areas like materials and energy are fair to discounted. And then when you look at healthcare, fairly expensive with very high expectations. Technology is expensive as well. So this grid, super helpful in allowing you to get fundamentals looking at cross-market, cross-sectors. With any questions, feel free to reach out to us. Thank you.